supercharged 56. That's it's quite an achievement for us. 56 of these we've done, but even more exciting, it means that there's 55 on the Google Drive that you can go and watch. So keynote speakers, mastermind, script and dialogue sessions. And for those who have attended these and attend them on a regular basis, know that there's always tons of gold nuggets to be had in these supercharged sessions. So welcome to everyone. Last quarter of the year, October, November, December. We all know that this is the best 3 months of the year in real estate. Only rivaled by January, February, March, or February, March, April kind of thing. But very, very busy months of the year if you take advantage of it. If you don't, then they're just like any other month. But really, really nice time of the year for everyone. It's warming up in most states and territories, Australia, New Zealand, and it's just a lovely time of year. People are a little bit more jovial, a bit more panicked because they've got to get things organized and done before the end of the year, but things happen at this time of the year. So it's a great time to be alive and working in real estate, rocking and rolling. So you've got a lot to look forward to. So let's have a look at the housing market. Let's keep a broad eye on that. As you all know, I've got Kiwi clients now. In fact, we've got some new clients from New Zealand, Angie and Priyank Patel from New Zealand. So welcome to the new members. Okay, so let's have a look at the market and let's just see what the hell is going on. So nationally, still on a downturn, negative 1.4% nationally for last month. So that's actually come back slightly, which we'll talk about. Quarter, negative 4.1. So over 1% drop sort of monthly is what's happening nationally. So we're in a downturn market nationally. Doesn't mean that we're in complete free fall here or in Perth or in Adelaide or in Brisbane, but because we're going to look a bit more closer. Annually, we're still at a 1.7 growth annually for the last 12 months. So we haven't even seen that complete 12-month wheel turn of negative figures. So it's still a 1.7 growth nationally. So combined capital cities for the month, minus 1.4, minus 4.3, and negative 0.7. That's combined capital cities. Combined regional is negative 1.3 for the month, negative 3.6 for the quarter, and still showing regionally 10% growth for the year. So obviously regional is still catching up. They're still not in that sort of complete downwards sort of slope the way capital cities are. Okay, let's have a look at the major cities. Sydney, negative 1 for the month, minus 6.1 for the quarter, and the annual growth for the 12 months is negative 6%. So the median house price has come down to $1,053,000 in Sydney. Melbourne, 1.1 minus quarter, negative 3.7, and annually negative 3.9. So also in a downturn. Brisbane, that has really turned very, very quickly. Brisbane, they're at 1.7 negative for the month, negative 4.3. So they've overtaken Melbourne in their downturn. So that's happened very quickly. But they're still showing a 13.4% growth for the 12 months. So they haven't quite seen their 12-month negative sort of numbers. Brizzy, 746 median house price. Adelaide and Perth, like very similar and marginal downturn. So Adelaide, negative 0.02, minus 0.2, and Perth is minus 0.4. So ever so slight sort of negative growth rates there.
What's the Melbourne median, Ryan?
Median house price in Melbourne, 774. Yep. So Perth and Adelaide. Okay, so Adelaide only a negative, a 0.1% growth in the quarter. So they're still showing a positive growth by 0.1%. And Perth is now actually showing a negative quarter, which is negative 0.4, but ever so slightly. I mean, it's for us, it's more of a plateau, slight down. All right. 12 monthly and annually, last 12 months, Adelaide is still showing a 19.2% growth rate, and Perth is showing a modest 4.1% growth rate for Perth in the last 12 months. Adelaide's median house price 649,983, and Perth's is 553,876. Okay, that's going on CoreLogic. I use the CoreLogic sort of, figures, stats. There is another one that says the median house price nationally is in Sydney is 1.5. So there are a few different stats out there, but most people use the CoreLogic ones. So let's have a look at what's happening. The heading is rates of decline in housing values eased in September. So that's a good sign nationally. It's a terrific sign for everywhere. So negative 1.4 decline in September, although values continue to trend lower. The rate of decline eased from negative 1.6 fall in August. The loss of momentum in the pace of value decline was evident across most of the capital cities and broad rest of state regions. Housing value falls accelerated in Adelaide and Perth this month. However, both cities continue to record only mild reductions in values relative to the other capital cities, down 0.2 and 0.4 respectively, what I've already mentioned. Tim Lawless says it is probably too early to suggest that the housing market has moved through the worst of the downturn, because we've just had another rate rise. However, if interest rates continue to rise, which they did, as rapidly as they have since May, we could see the rate of decline in housing values accelerate once again. I would 100% agree with that. I think that is pretty spot on. Okay, we've also seen the flow of fresh listings continue to slide through the first month of spring, which is uncommon for this time of year. And I think to have that nationally is no rocket science to me, because it'll explain a bit further. Nationally, there's a housing shortage. Nationally. Most cities continue to see substantial buffer between current housing values and where they were at the onset of COVID in March 2020. At the combined capital city level, housing values would need to fall a further negative 0.13% before wiping out the gains of the recent growth cycle. While Melbourne, which saw a softer upswing than other regions, plus 17 from the trough to peak, good growth, if that's the worst, would only need to see another negative 4% fall in values to return to pre-COVID levels. So just remember, they had another boom that Western Australia didn't have as well. Do you remember that? We kind of missed out on that one. All right, we're still seeing some resilience to value falls around more affordable areas of Adelaide and Perth, as well as some regional markets associated with agriculture, mining, and tourism. It's the first time they've mentioned that in like years, but we've got to mention for our Perthians and our West Australian clients, which is 75% of our membership, we're still seeing some resilience to values falls around more affordable areas like Adelaide, as well as some regional markets. So that's interesting. All right, let's continue. So we've got, at the time when the flow of new listings is typically ramping up, the spring selling season is off to a slow start in Australia with stock levels. So number of new listings added to capital city housing markets over the 4 weeks ending September 25 was 12% lower than the same period this time last year. So we 12%, it's minus 12% down from last year. Minus 10% below the 5-year average. That's massive. That is, if we talk about an industry that is based on supply and demand, this is really the tail of the tape. So we really, the indicators are there that nationally we must be near the bottom. Okay, when we haven't seen any evidence of distress. We haven't seen any evidence of distressed sales or panic selling through the downturn to date. In fact, it has been the opposite, with the trend in newly listed properties continuing to diminish at the time when freshly advertised stock levels would normally be moving through a seasonal ramp up. The reduced flow of new listings to the market could be a key factor helping to keep the floor under larger price falls, supporting the subtle reduction in the rate of decline through September. So that's all very, very good news for the property market, I believe. At the regional level, rental growth moved through a peak in May 2022. So even the rental peak is slowing, and that's normal for that to happen. When if it's kind of stabilizing, it stabilizes. The slowdown in rental growth is a little surprising given rental vacancies rates remain so low and overseas migration is ramping up. So there's the reasons why stock levels are getting absorbed. And so although there has been a subtle uptick in vacancy rates across some regions, as rents continue to rise and dwelling values generally trend lower, gross rental yields remain on a rapid upward trajectory. The most important factor influencing housing markets will be the trajectory of interest rates, which remains highly uncertain. The cash rate has surged 225 basis points higher through the tightening cycle to date. Interest rates, this is interesting, interest rates have not risen at this fast pace since 1994. So they've really got a handle on how to control this market, and it's working. When households were arguably less sensitive to the sharp rise in cost of debt. The good news is that inflation may be moving through a peak. With the recent release of the monthly CPI indicators, it looks like headline inflationary pressures may have eased a little through the September quarter, with the ABS reporting a reduction in annual inflation from 7% over the year ending July to 6.8% over the year ending August. If inflation is slowed, we could see the RBA start to ease back on the aggressive rate hike cycle that commenced in May. Once interest rates stabilize, housing prices are likely to find the floor. Considering most economists are forecasting rates to peak through the first quarter of next year, the coming months are likely to feature further declines in home values. So we've probably got another quarter of downturns, and then next year we'll probably see the end. I don't think there'll be another rate rise personally. Or if so, there might be another, one more, or
I think there'll be a couple more.
maybe a couple more. But I can't see it looking at this. I think it'll ease definitely. And then possibly even rate declines later in 2023. So strong labour markets conditions should help to contain any material rise in mortgage distress. With national unemployment rate at 3.5%, which is horrifically low, that means the people are working who don't work. I know. Because 10% of the population don't want to work. 3.5% unemployment, that means 7.5% are working, and they don't want to be working. Only joking. For buyers, stock levels have normalized across more expensive capital city markets, providing more choice and a better negotiation position. For sellers, conditions have become more challenging amid less demand. Okay, a bit more closer in Perth. We're in a downturn market. I mean, a dry sort of stock market. Sales have come off. Only 734 transactions last week. We have been experiencing more 800 to 1,000 in previous weeks, with the higher ones being more in the panic sort of station side. But there's only 8,116 properties available for sale in Perth.
Because we haven't had the new stock, that's why.
And only 1,724 properties available for rent. Less than 10,000 properties available in Perth. So I'm sorry, throughout this whole peak, boom, spike, whatever you want to call it, because we've had probably the least of it, we haven't seen stock levels go below 10,000. This is the first time, and that's combined of stock. And so as far as stock levels are concerned, we're still in my opinion, in a very, very good, well, let me just reiterate that. It's a very good market for homeowners because their prices are holding, because there's a lack of stock. but it's not a terribly good market for agents because stock is hard to come by. And this was confirmed. This has probably been the worst month that we've had, our members have had, September, probably the worst month conglomeratively. You know, sometimes we have, you know, bad months for some and outrageously good months for others. But on the whole, it's, you know, we've had some really incredible months, but certainly September, I was looking at these figures going, okay. So that's the holy all of it. So let's flick it back to you guys. What are you noticing